Assalamualaikum, Kajihau, Epadigi, Konige, Vanakkam. It's our lecturer, Mr. Magno, and to all my fellow friends that will be watching this presentation later. We are group 20 that comprise myself, Ahmad ALIF, Ahmad FAHMI, Ahmad QAYYUM, and Mohamad LUQMAN. Will be presenting the same topic that group 4 had presented in the beginning of the semester, which is financial reporting in public sector. Before we move even further with the presentation, I would like to address that the information that and knowledge that we are going to provide to all of you might be the same as the group that has presented the same topic previously, but we will make sure that the information that there will be a slight difference in terms of explanation. Now, let's move on to the next slide, which is the presentation, the flow of the presentation. So there are basically 6 elements, which is definitions of financial reporting, objective of financial reporting, and as you can see in the slide, there are 6. So now let's move on to the next part, which is about the definition of the financial reporting. As you can see clearly in this slide, financial reporting in the public sector is defined as the financial state of government as measured by sustainability, vulnerability, and flexibility, and all of which are considered in the context of the larger economic and financial climates. And I think that it is quite easy to understand and comprehend, and I think you should understand this definition easier. So now let's move on to the next part, which is the objective of the financial reporting in public sector. First and foremost, the first one in terms of compliance and stewardship, the objective is to assess the compliance by government agencies with legal and other stationary requirements, statutory requirements regarding how resources are obtained and spent. The second objective is in terms of basic of planning, and the objective is to ensure relevant authorities in government make rational decisions about allocation, distribution, and utilization of resources for various sectors of the economy. Now, the third objective of the financial reporting is the performance evaluation, and the objective is to serve as a useful tool to monitor the performance of government organizations, and also in terms of their efficiency and effectiveness in use of public resources. And the next objective, which is the fourth one, which is the quality of the services. And as you can see in the slide, it says that the objective is to assess the capability and the capacity of government organizations, and also to provide high quality products and services, and as its ability to continue to serve the public. Now let's move on to the fifth point, which is the statement of achievement. And its objective is to provide government opportunity to put forward statements of its achievement to influence users and public. And also last but not least, the last objective of financial reporting in public sector is to provide information to all relevant interest groups on the economic resources and obligations of government organizations for a certain period of time. And now let's move on to the next part, which is identify regulatory framework and procedure that will be explained further by Mr. Ahmad QAYYUM.
Thank you, Alif. So, I will presenting about identify the regulatory framework and procedure that related to financial reporting. Okay, first of all, we have, next slide please. Firstly, we have Article 99(4) Federal Constitution. This article to show which of the assets are invested or held and which liability are not have been settled yet. This usually show at the end of the completed financial year. The next one would be the section Section 16(1) of the Financial Procedure Act 1957 revised 1972. So under this section, these are 5 statements that require for financial procedure, which consists of statement of consolidated revenue account, statement of consolidated loan account, statement of consolidated fund account, statement of trust account for any trust fund under section 10 of FPA 1957 revised 1972. The last one would be statement of asset and liability of federation or statement government, state government at the end of the financial year. Next slide, please. So, here we have 2 Treasury Circular, which are Treasury Circular number 4, 2007 and Treasury Circular number 5, 1994. Okay, for the first one, Treasury Circular number 4, this circular is to show the preparation and presentation of annual report and financial statement of federal statutory bodies effective for financial year of 2007. The main reason why this circular exists is to recognize or identify the minimum disclosure requirement in the annual report. The next one will be Treasury Circular number 5. This issued the proper guideline for preparation and presentation of annual report and financial statement of statutory bodies. This circular is planned to improve the accountability as concern of preparation and presentation of annual report and financial statement. Next slide, please. So here we have government accounting standard. We have 2 here. As you can see here, both standard are the guideline. So let's see what are the difference between these 2. Let's go. Okay, for the first one, government accounting standard number 1 is the guideline of the government accounting procedure that standardize the principle, basis, conversion, rule and regulation in the presentation and preparation of government financial statement. While for government accounting standard number 2 can be described as the guideline as the guideline too. So the difference is the standard of the preparation and presentation must be true and fair manner. From this presentation, the information should be relevant, reliable, comparable, and easy to understand. Okay, next slide. So here we have International Public Sector Accounting Standard, IPSAS. Okay, so basically this is the guideline which has been set by the International Public Sector Accounting Standards Board. So what we call is IPSASB. So what is IPSASB? So this is the board that their member are from International Federation of Accountants. They develop accounting standard and promotes the acceptance and link up with the IPSAS in the public sector. Next slide. So the next part will be the key accounting concept for public sector financial reporting. Under this accounting concept, there are several key points that we need to know and understand. It consists of 5 concepts, which are objective, entity concept, periodicity concept, matching concept, going concern concept, and last but not least would be accrual or recognition. For better understanding, we compare government accounting and the commercial accounting. For government accounting, it prepare financial statement to the public to meet the legislative requirement and no profit is gained, while commercial accounting, it prepare financial statement for the benefit of shareholder. The main objective would be to maintain the capital, profit, growth, and profit to the owner. The second concept would be the entity concept. The government accounting is a separate entity, which means that the financial statements are not connected directly to the business or the owner. But for commercial accounting, the entity is related directly to any business and owner easily to recognize as the whole organization. The next concept would be periodicity concept, which government accounting relates to the flow of the funds or money during budgetary period and annual budget comparison, while for commercial accounting, it relates to income determination, which means that to find out the company earning in the present or future value. The next concept would be matching concept. When they receive the money allocation, it will be compared to the actual expenditure to show to the public where is the money go. While for commercial accounting, the revenue will match up with the expense to get the net income of the company. Next concept is going concern concept that is not applicable as a budget if it only lasts for 1 year in government accounting, and any excess budget for that year is not carried forward to the next financial year, while for commercial accounting is assumed as going concern, which their firms need the resource to continue operating, which the money will be carried forward to the next financial year to avoid bankruptcy. Last but not least would be the accrual or recognition in government accounting consists of cash basis, accrual basis, as well as modified cash basis. But commercial accounting only have accrual basis in their recognition. Next slide, please. Okay, just now, I just mentioned 3 types of accrual in the recognition. So what are these all about? Firstly, for a cash basis, it is recorded when the cash is received and the cash has been paid out. So payable and receivable account are not included. This method mostly used by small business company because it is easier for them to track the cash inflow and outflow. Next would be accrual basis, where the revenue and the expense are recorded when it is available and measurable whether the money has been received or paid. Okay, why government accounting use this basis? It is because it provides assistance to get better overview of their performance and the accuracy of the profitability so that they can make some improvement in terms of accountability and policy. The last one would be modify cash basis. So it is an alternative bookkeeping method for government, which basically combine both cash and accrual basis, where the short-term asset on the cash basis, while the long-term one would be recorded on the accrual basis. With few exception, the expenditure is recorded when liability are incurred. That's all from me. Now I will pass to Mr. Alif.
Thank you, Ahmad QAYYUM, for a great and precise explanation. Now, I would like to continue our presentation about the federal government financial statements. So the next part is about the federal government financial statements, which is the first one that you need to know is the Accountant General of Malaysia prepares this report, which is this financial statement annually in accordance with Section 16 bracket 1 of the Financial Procedure Act 1957, Government Accounting Standard and IPSAS, as mentioned by QAYYUM just now. And the second point is the financial statements are then audited and certified by the Auditor General in accordance with the requirements of the Audit Act 1957 before it been submitted back in Parliament pursuant to Section 16(2) of the Financial Procedure Act. And the third, but not least, the purpose of these financial statements is to disclose the financial condition, cash flow, and financial performance of the company, as these financial statements include all financial transactions relating to the resources and uses of financial resources appropriated by the Parliament. And the next one, that you need to know is about the characteristic of government accounting. The first and foremost, the government accounting systems must must comply with the nation's constitution and legislative bodies. And the second one is the accounting system must be budget linked, which means that as complementary tasks in government finance, budgeting and accounting must be tightly integrated. That's what it means by the budget link. And also, budgets are usually segmented into many responsibility centers or expense categories. And the third one, accounts must clearly identify the objective and reasons for receiving and redistributing money, as well as the executive authorities responsible for their custody and uses for program implementation. And the fourth characteristic that you need to know is financial accounting must be auditable by external review bodies and offer the information required for an audit to be successful. And the process accounting established that established responsibility by documenting, classifying, and also recording the transaction, whereas auditing establishes the presence of such evidence. And also, auditing will ensure that all the payments that are made or planned and made as required. And the fifth characteristic is, in order to effectively handle finances and operations, administer programs and conduct internal audits and evaluation, financial system must be created. And it is also applied to void accounting because it is used to track expenditures, obligations, and balances. And last but not least, the last characteristic, which is the sixth one, is initiative, economic, and social consequences also should be recorded, as I mentioned before. And the next part, which is about the main components of federal government financial statements, will be explained further by the next presenter.
Okay, thank you, Alif, for the in-depth explanation. So now let's take a look at the components of the federal government's financial system, financial statements. Next slide, please. So now, starting off with the statement of financial position. So, what is recorded under this statement of financial position? So the first record, no, previous slide. So the first part in the financial position, statement of financial position, are the public monies. So the public monies actually shows the amount of cash and investment the government has received or is in possession of. Moving on to the next slide. So as you can see here, we have the public monies, which shows the cash and investment that the government has currently is in possession of. So the next part in the statement of financial position is the consolidated funds accounts, which consists of three parts, which is the consolidated revenue account, the consolidated loan account, and the consolidated trust account. So starting with the consolidated revenue account, the consolidated revenue account is used to record the government's revenue and expenses throughout the financial year, whereas the consolidated loan account records various types of different government loans. And lastly, the consolidated trust account records the amount of trust, the trust funds, and the amount of trust funds and public funds of the government. The federal government uses trust fund accounting to link receipts designated by law for specific purpose with the expenditure of those receipts. So moving on to the next slide. And with that, I now pass it to AHMAD FAHMI for continuing the next part of the presentation.
Thank you, LUQMAN. So for the next main component of the federal government financial statement is the statement of cash receipts and payments. So basically, there are three cash transactions in this statement that compromise, which are cash at banks, represent current accounts and deposit balances in financial institution. The second one is cash in hand, which means it consists of petty cash. And the last one is cash in transit, which means it is cash that not deposited yet in the bank, and cash at bank does not accounted for the accounting officer's cash accounts at financial year. Next slide, please. So basically, the statement of cash receipts consists of receipts and in the form of revenue, loans, capital receipts, and also trust receipts. Next slide, please. While the statement of payments consists of payment in the form of operating expenditure, development expenditure, repayment of loans, external assistance, capital and trust expenditure, and also the total payments. Under the total payments, we will know that if the payments are in surplus or deficit. So how do we know if the payments is in surplus? So it's basically based on the receipt, and when the number figure is in positive, it is a surplus. While if it is negative figure, otherwise it is a deficit. Then we just put it the number figure, and we put it the opening balance, and last but not least, we will see the closing balance at the end of the financial particular year at the end. Next slide, please. This is an example of the statement of cash receipt and payments. Next slide. Next slide. Now I'll pass back to LUQMAN.
Thank you, Fahmi. So now let's take a look at the statement of financial performance. So the statement of financial performance, the main use of the statement of financial performance is to show the users of the financial statement whether whether it shows a surplus or deficit. As Fahmi mentioned previously, if the expense is greater than the revenue, it is a surplus. Whereas if the expenses is lower than the revenue, if the expenses is greater than the revenue, it is a deficit. Sorry, my mistake. If the expenses is lower than the revenue, it is a surplus. So the statement of financial performance includes funds such as loans, foreign assistance, recoverable loan, and others. So this shows the source of the funds. And so what actually does the statement of financial performance actually do? So the statement of financial performance is important to the users of financial statements because it helps them to understand how the government achieved its current state of the financial performance. And moving on to the next slide. I now pass it to Fahmi to continue the components, the next component.
Okay, thank you, LUQMAN. So for the next main component of federal financial statement is the statement of memorandum accounts. So basically, what is memorandum accounts? Malaysia federal government statement of memorandum accounting shows a portion of the government's financial assets and liabilities that are not being reported in the statement of financial position. Memorandum of assets includes recoverable loans and investment that are charged to operating or development expenditure, whereas memorandum of liabilities includes the disclosure of public debt and other liabilities. So we know that in the memorandum of accounts, there are two things that we can consider, which is the memorandum of assets and also the memorandum of liabilities. Next slide, please. Next slide. So for the memorandum of assets, it shows a portion of the government financial assets. It consists of recoverable loans, which are the loans which are granted by the federal government under the national development policies to improve the society's standards of living or identified projects with potential to generate economic growth. For example, of recoverable loans are state governments, local authorities, statutory bodies, cooperatives, company, foundations, and organization, housing loans, and also conveyance loans. So the second one is investment. Investments is also includes investment in companies, statutory bodies, and foreign agencies such as Khazanah and all that. Next slide, please. For the memorandum of liabilities, it displays only a portion of the government liabilities, which divided by two, public debt and also other liabilities. For public debt, the federal government will raise funds through borrowings to finance part of national spending. For example, foreign loans, domestic loans, and also external existence. For example, example of domestic loans are treasury bills, Malaysian government securities, and government investments issues, and also suruk. Next slide, please. For other liabilities, it consists of three main things, which is notes payable, unclaimed securities, and also CDS. So for notes payable, it is a financial institution that contains of a written promise by one party to another party for a definite source of money. So the provisional notes is issued by the international financial institution. These notes are paid periodically as agreed upon by the parties concerned. So for the next one is unclaimed securities. Unclaimed securities consists of share, bonds, and other financial instruments belonging to the public, which are transferred to the government in the name of Ministry of Finance and also the Accountant General under the various acts. So securities surrendered to the Accountant General of Malaysia when a company or trustee failed to trace shareholder within the stipulated time period. So the last but not least is CDS. CDS is also called as a central depository account, where the securities credited into the CDS of Ministry of Finance when beneficial shareholders fail to deposit securities into the CDS account when the specified within the specified period. Next slide, please. This is the example of the statement of memorandum. Next slide. So for the notes, for the last but not least, the main components in the federal financial statement is the notes to the financial statements. So further explanation and detailed schedule of amounts shown in the financial statement, and also information about the basis of preparation of financial statements and specific accounting policies are used. The disclosure of this information that is not presented in the financial statements. Next slide, please. Now, for the state government financial statement, I'll pass back to LUQMAN.
Okay, thank you, Fahmi. So for the state government, first of all, there are actually requirements that the state government must follow when preparing the financial statements, which is under the Federal Constitution of Article 97, which says that all revenue that the government obtains should be recorded in the Consolidated State Fund with the exception of Muslim monies. So, to continue, the state government financial statements is actually prepared by the state financial officers. So the components to be disclosed within the state government financial statements include the statements of financial position, the statements of cash receipts and payment, and the statement of memorandum account. Now, this is different compared to the federal government financial statements, which I mentioned previously. So the federal government financial statements included the statement of memorandum account. The federal government financial statement include the statement of financial performance accounts, whereas the state government financial statement does not include the statement of financial performance. So next slide. now I pass it to I pass it back to Fahmi to explain the local government balance sheet.
Thank you, Luqman. So that is Luqman has presented about the state government financial statement. Now I'll be presenting about the local government financial statement. So the financial statement for local government is different. It's a little bit different compared to the financial statement of both federal and also state, because it is due to different of laws and accounting basis. So basically, the financial report of the local government is prepared by the local government itself in compliance with the Local Government Act. So the local government is an agency where the revenue collected will be used to support all the local government programs and also all the activities under the local communities. So the components to be disclosed in the financial reports are such as statement of financial position, which is balance sheets. Next slide. The income amount. Next slide, please. Cash flow. Next slide. Expenses statement. Next slide. And also statutory declaration, auditor certificate, and other statements. Next slide, please. So moving on to the last part of our presentation, we will be explaining about the uses of the public sector financial statement. So there are 6 of them who will be using the financial statement. So the first one is the lawmakers, or we can call it as the legislators. So meaning that the legislators comprising the MPs, the senators, and also the state assemblymen. So they will pass the budget as well as they approve new taxes. So the financial statement is to provide information on the impacts and achievement on the nation. So the next one is the one who will be using the financial statement is also the government managers. They will formulate various of plans, programs for implementation at various levels. This information can help them to make better decisions on the success of various programs. The next one is the government auditors itself. They will be responsible to ensure the public money are properly spent, the level of compliance with government rules and regulations, and also policies. Now, the last 3 uses will be explained by Luqman.
Okay, thank you, Fahmi. So the last 3 uses of public sector financial statements, firstly are the taxpayers. So the taxpayers, as we know, the taxpayers, as we know, are the main source of revenue for the government. We, such as ourselves, the public, we pay taxes almost every day in our lives. So these taxes contribute to the government funds, and in exchange, the public gets access to the information on other sources of government funds, as well as what the government is spending these funds on, based on the financial statements of the public sectors. So the next one is the investors and entrepreneurs. So investors and entrepreneurs would want to see their investments be fruitful. Hence, it is important for them to use the financial statements in order to analyze and make rational decisions on whether they are profiting from their investments. And NGOs, they take care of special interest groups. They also can gain information on the impact of government policies to certain sectors of the society. And with that said, we have come to the end of our presentation. We appreciate the attention you have given us, and hopefully some of our friends watching this can learn something new from our presentation. So with that, we say thank you. Dah.
Thank you.